Staying up to date with Zero DT. Zero DT options strategies are relatively new ground for retail traders. At Tasty, we began our data set. We collect Zero DT option prices every 10 minutes in March of 2023. Happy 18 months. We're 18 months in now, Bat. While we've analyzed the first year's worth of potential Zero DT trades extensively, it's time to expand our analysis and see how the Zero DT short premium has or hasn't continued to perform. Would you like to place your bets on whether or not and how the Zero DT has performed? Place your bets, Mr. Batista.
Like from a short premium point of view, I'm assuming, from a 0-day options or
We're gonna continue to look at strangles, if that's what you're asking. Here, the question is not.
It's done well.
The question is in a certain period of time, which is we've gone from like 3 or 4 months when we first started the data to where we are today. The real question is, have we learned that, hey, some of this stuff works, some of this stuff doesn't work? Like, what are the takeaways? Is it better to manage the position? Is it better not to touch the position? Is it better to take your profits early? Like, is it better to use defined risk? Like, what
You have to take your profit. I think you have to take your profits early. I think that's probably going to be one of the biggest takeaways.
Okay,
You can't set it and forget it.
let's take a look. I agree with you. I think the biggest takeaway is going to be you have to take your profits and move on. And my experience with Zero DTs are if you let it go, it's just death.
Yep.
If you take your profits, it's the only way you can trade it. Using 18 months worth of data in the Z options collected every 10 minutes, we considered selling the strangles at the market open with a variety of initial deltas. Okay, we examined managing the winners at 25% of max profit with the losers held through expiration or leaving the positions unchanged. Tony and I are both saying managing profits at 25% of max profit is the way to go. We separated the performance of these strategies into the first 6 months of the data set, the middle 6 months of the data set, and the most recent 6 months. So we have 18 months worth of data. And all trades were assumed to be filled or execute at mid-price because that's the only way we could figure it out.
What else are you going to do, right?
Right. But here's the key here. Manage at 25%, leave positions unchanged. Was there any difference in the first 6 months, middle 6 months, or last 6 months? You want to take a guess? Any of those 6 month periods, are they better now? Markets worse, same, all random?
I'm going to say it's random. It's all the same. I don't know, though.
So staying up to date with Zero DTs. So the first thing we're going to look at is just overall. We're just going to look at 18 months worth of data. All right.
Got it.
30 delta. Look at these numbers. These numbers are stupid. These are managed positions at 25% of max profit. Okay. 88%, 92%, 93%, 94%.
Should be no other place but there.
75, 50.
Is that all I knew about trading? I would say that's where I want to be. Whatever that guy's doing, I want to do what that guy's doing.
75, 59, 59, 34, 10. Okay. All the C bars are your worst losses. Those are your average P&Ls. Those are your win rates. That's managed throughout 18 months. We have a lot of data here, so you go back to it. Overall unmanaged. Now, this ends the argument already on the second slide. Unmanaged. So you go from a 90% win rate to a 60% win rate, 60 to 70. All your profits across the board go to losses. Every single unmanaged strategy in the zeros is a loss. Like Tony mentioned before, he said, I was listening to this guy who said he's selling whatever, some Zero DT thing. Do you know that every single Zero DT person that's not a Tasty trader that I've listened to talk about Zero DT trades talks about them as unmanaged?
Yeah, you can't.
Nobody's done this research. Not one person I've seen do this research at all. Look at these numbers. No matter what strangle you do, unmanaged is a loser. Go back to the slide before, Beth. Every single P&L here is a winner for managing at 25% of max profit. You go to the next slide, every single trade is a loser. All right, let's go to the next slide. So now, here's the first 6 months of managed. And you're going to see the numbers are basically, they're pretty much all positive. There's one negative number there, but they're pretty much all positive, and the win rates are very high. That's good. Let's go to the next 6 months. Unmanaged. Every number is a loser, okay? And the win rates go way down. So I don't know how you can look at this and think if there's any other way to trade Zero D. But the question becomes, is the second 6 months any different than the first 6 months? So we're going to go to the next 6 months. So these are the middle 6 months, okay? Now, what's interesting here is these numbers got a lot better. Now, part of it could have been, hey, you know what? Volatility was collapsing during this period. Could have been a lot of reasons for
Well, the market was just going sideways.
the market was going sideways for a certain
All
period.
things you can't predict.
Right. But the win rates here are all in the 90s, and the average P&L jumped up. It's like around $100 across the board, whatever. And the 50, even the 15 Delta Strangles is positive. Go to the next slide, Beth, which is mid 6 months unmanaged. All these numbers are losers. Okay. So the research team has made their case. I mean, we can't
To
get
trade these things, you can't set them and forget it. It's not the round
we can't get any we can't get any cleaner data than this is. Let's go to the last 6 months. So we're going to go to the last 6 months managed. These weren't quite as good as the middle 6 months. The win rate was still up there, but the last 6 months have been more volatile, and therefore the profits have been down a little bit. And I'm sure if you go to the next slide, which is the unmanaged, the numbers are all going to be disastrous, and they are. Do you know that every 6 months we looked at, all the unmanaged positions, every single one of them was a loser, regardless of the
You knew that.
deltas.
Think about that.
I know. Regardless of the deltas, they were all losers. The win rate was low, the deltas were crappy, blah, blah, blah. That's it. So these are the takeaways. Given the relative novelty of robust zero-D markets, it's important to continue to adjust our approaches as more data comes in. No matter what time frame we examined, managing winners aggressively has been the key to zero-DT's success. Selling and forgetting was a recipe for large losses. We have been very committed to our research in zero DTE. I think we're the only firm, the only think tank that has proven this stuff out. And managing early, 25% or less, is the key to zero DTE success. Beyond that, choosing strikes is a personal decision based around balancing your acceptable levels of risk. Managed closer to the money trades have made more money over time, but suffered more frequent losses and had bad losers.
Meaning the P&L was
Yeah, but even so,
swings.
the 30 delta, 20 delta, 15 delta, or 10 delta, strangles, whatever one you chose, didn't matter that much. The numbers were all pretty consistent, and they were in the positive territory. Just the whole takeaway from this is, regardless of the time frame, manage early.